everyone, I'm Gurleen. I hope you're doing well. In today's video, we'll be discussing the weekly market outlook and answer one of the most important questions. Where are the markets headed? We'll also discuss a few select stocks wherein good risk to reward opportunities are brewing up. So be sure to stick around till the end of the video and don't forget to hit the like and subscribe button and do ring the notification bell so that you never miss an update. Right before we start, the overall market sentiment looks neutral as of now. The major indices are holding above the crucial levels of support along with the upside supply pressure that's coming in at every uptick. The result season is going on and it might as well turn out to be a trigger for a directional move, but we are yet to find out. So without any further ado, let's take a look at the technical perspective, starting with Nifty 50 on a weekly time frame. So here you can see that in Nifty, we had a downward sloping parallel channel and Nifty broke out of the same, registering the highest weekly closing. Now, but in this week, we have seen a pause coming in from the previous highs, and it also coincides with the harmonic reversal pattern on the daily time frame. Also, it does look like a bearish engulfing candlestick on the charts, but one thing that's very important while analyzing candlestick patterns is that it holds relevance only at crucial levels of resistance or support. So, does that mean that we are in for a deeper pullback? Well, to understand that, let's take a look at the daily time frame. As we've been discussing over the course of the week, once again, Nifty traded sideways within the range of the candlestick that was registered in Monday's trading session and is also holding up above the 200 simple moving average. An interesting update over the weekend is the Q4 result posted by Reliance, where the numbers look decently well. Now, this might as well turn out to be a trigger for Nifty to catch on to a trend, though we are yet to find out. Now, here we have seen a sideways development over the past week, and looking at the price action, Nifty is consolidating right above the major support level of 17,574, which is not really a good sign. So here it's probably the last chance for Nifty to bounce from the same, and in that case, the immediate levels to watch out for on the upside would be 17,770. But if we do see a breakdown at this level of 17,574, which also coincides with the 200 simple moving average, now in that case, Nifty can possibly test the downside levels of about 17,500 to 17,485 to begin with. Now let's take a look at the hourly time frame to understand the trading approach. Now you can see a continuous decline and even a breakdown below the hourly moving averages, and the only level defending Nifty is the level of 17,574. Now, because a sideways grind is going on, it might be difficult for directional traders to capitalize on the choppy and erratic moves within the range. So one can sit out and wait patiently for the setup to develop and unfold. Now, if you are looking for a fresh short trade, the possibility would open only at the breakdown of this low at 17,574, and in that case, Nifty can test the downside levels of about 17,500 to 17,485. The potential upside would only open up above this high of 17,770 for the targets of about 17,840, followed by 17,926. Now let's talk about the support and resistance levels for Nifty. So the support is placed at 17,500 followed by 17,395, whereas the resistance is placed at 17,770 followed by 17,840. Now let's move to Bank Nifty, starting with the weekly time frame. So here you can see that Bank Nifty broke out of this falling trend line, and as of now it's defending this polarity zone of 41,650 to 41,800. So is there still a chance for an upside move? Well, to understand that, let's take a look at the daily time frame. Now, if you've been watching the videos regularly, we've been discussing since Monday that considering such a wide range candlestick on the daily chart, it's highly likely for Bank Nifty to consolidate within the same range before catching on to a trend. Now here, Bank Nifty is holding up above the major support level of 41,800, and as of now, it's on the safer side. The only cause of worry would be a breakdown below this level of 41,800, and in that case, Bank Nifty can possibly test the levels of about 41,400 to 41,280. So here the view is that Bank Nifty can continue to trade sideways within the range until and unless we see a decisive breakout or a breakdown. Now it's very important to let the setup develop and then strike at the right time so as to avoid getting caught at the wrong side of the trade. Let's take a look at the hourly time frame. Now in the last video, we discussed that if Bank Nifty breaks below this low of 42,111, then it can possibly test the level of 41,990 on the downside on an intraday basis. And here you can see that the trade plan worked decently well in Bank Nifty. So what about the intraday trading approach for Monday? So here a fresh short trade would open up below the level of 42,000, and in that case Bank Nifty can possibly test the levels of about 41,800 on an immediate basis. So one can keep an eye on the level of 42,000 for a fresh shorting opportunity. Here, as the range is quite wide, so we might witness some spikes as well on both the sides. So for a fresh long trade, it's better to wait till the level of 42,385 is taken out in Bank Nifty on the upside. So if we do see a breakout at this very level, then we can consider Bank Nifty to test the levels of 42,500 on an immediate basis. So that's how you can capitalize on the opportunities within this wide range, and a major shift in the trend will only be at the breakout or breakdown of the range on the daily time frame. Now for Bank Nifty, the major support level is placed at the level of 41,800 and the resistance is placed at 42,385 followed by 42,505. Let's also take a quick look at the small cap and mid cap index. So here on the daily chart, you can see a steep rise in the small cap index, and also such small body and small wick candlestick at the highs or amidst a trending move are generally a sign of exhaustion at the highs. So here it's time to be cautious as a pullback might play out in the index towards the levels of 9,000. Also, for this up move to sustain in the near to medium term, it's crucial for the small cap index to hold on to this recent low of 84.92. Moving to the mid cap index, we discussed over the last weekend as well that here the breakdown of this support zone looks like a shakeout, and thereafter the mid cap index continued to inch higher. Now with the broader uncertainty, the mid cap index is also consolidating at the highs and looks quite stable, and here a maximum downside level is capped at 30,540. Now let's move to stocks, starting with ICICI Bank. Now ahead of the quarter 4 results, ICICI Bank is trading at the polarity level of 878 to 882, and the street is expecting stellar results, but we'll find out in a bit. Now here from a technical perspective, ICICI Bank is at quite an interesting point, and if it holds on to this zone of 878 to 882, then in the upcoming trading sessions, it's possible for ICICI Bank to inch higher towards the recent highs of 915 to 920. Now if this setup gets triggered, I'll be considering an invalidation level of about 860 on the downside. The next on the list is Reliance. Now you can see that Reliance has reversed from the harmonic potential reversal zone of 2396 and has been trading sideways. Now if it turns out to be a result play with a gap up, then the immediate resistance level on the upside to watch out for is 2396, and on the downside the major support levels are pegged at 2275 to 2290. Coming up next is PVR. So on the weekly chart, you can see that a head and shoulders top was triggered in PVR, and along with it a harmonic pattern also came into play, the target of which happens to be at the level of 1337. Though on the daily chart we have a declining structure, and as of now the stock is consolidating within a range, and here a fresh breakdown at the level of 1480 would call for an open target of 1337, which happens to be the harmonic potential reversal zone as well. But it is a conditional setup as of now, so wait for the setup to get triggered and the stops can be placed at the upper end of the range. Now moving forward with the update on Grasim. Now we discussed in the last video that a harmonic pattern has been triggered in Grasim at the breakdown of this pivot at 1691.30, and here a fresh shorting opportunity should be looked at the breakdown of 1680. So here you can see that Grasim has tested the levels of about 1657 on the downside, and here an estimated target of 1628 can be considered. Also, initially we were considering the invalidation level to be 1735, but as the stock has already given a move into the favorable direction, so the risk can be adjusted by trailing the stops to the levels of about 1692. do. Moving forward with the update on Cipla, so we discussed in the last video that how Cipla was trading within an inside bar and it was a wait and watch setup until and unless we witnessed a decisive breakout or a breakdown. So here, Cipla broke out of the range on the upside and tested the levels of about 918, and here the upside looks capped at the levels of 920 to 925 because of the overhead supply, so it's best to trail the gains here. Well, let's see what the week holds ahead, and on that note, it's Gurleen signing off. Until we meet again, have a good time.